All right, let's get straight to it. If you're a Muslim here in the UK, there's a simple mistake you could be making with your investments that might cost you literally millions over your lifetime. No joke. So today, we're going to break down the practical, halal investment strategies that let you grow your wealth without ever having to compromise your faith. We're going to make sure every single pound you invest is working for you the right way.
And you can be sure we're getting this right because all the insights and strategies we're diving into today, they come straight from the experts at ProTax Accountant. These guys are a leading UK firm that specializes in tailored financial advice, so they've really laid out the perfect roadmap for us.
So, let's start with a really direct question. Are you, right now, losing out on your investments just because of taxes? I mean, a huge chunk of your returns just vanishing? The answer? Well, it might actually shock you.
Yep, you're seeing that right. £2.6 million. That is not a typo. You know, over a 40-year career, a higher-rate taxpayer could lose that much just to taxes, simply by using the wrong kind of account. That is a life-changing amount of money, right? It just goes to show that how you invest is every bit as critical as what you invest in.
Okay, so the big question is, how do we avoid that massive tax bill and make sure we're investing correctly? Well, here's the game plan for today. We're going to start with the absolute foundations of halal investing. Then, we'll explore all your Sharia-compliant options. After that, we'll get into the really powerful stuff, tax-free investing with ISAs and halal pensions. We'll also cover the super important topic of calculating zakat on your investments, and then we'll wrap it all up with your next steps.
All right, first things first, before we can even think about picking an investment, we've got to know the rules of the game. So what actually makes an investment halal? Let's lay down that solid foundation.
You know, at its heart, halal investing is really all about fairness and ethics. On the surface, it means you're steering clear of companies that deal in things like alcohol, gambling, or pork. But it goes way deeper than that. It's about strictly avoiding interest, which is known as riba. And it also means you can't get involved in things with excessive uncertainty or pure speculation. That's a concept called gharar. Really, you can think of it as investing in real, tangible, productive businesses, not just, gambling on where the market's going to move next.
So, you might be wondering, how does a massive company like, say, Apple get the green light? Well, it's not random. Experts use this really rigorous two-step screening process. Step 1 is the business activity screen. Pretty straightforward. Does the company make its money from anything that's forbidden? If it passes that test, it moves on to Step 2, the financial ratio screen. This is where they dig into the company's books to make sure its debt levels and any income it gets from interest are below a very, very small acceptable threshold.
Okay, so now we've got the rules down. Let's get to the fun part. What are your options? Where can you actually put your money? And I've got good news for you. The world of halal investing is probably a lot bigger and more diverse than you think.
Seriously, you've got a whole menu of choices. There are Islamic savings accounts, which work on a profit-sharing model instead of interest. Then you've got sukuk, which are basically like Islamic bonds, but they're backed by real physical assets. You can also invest directly in stocks that have passed the screening process. Or, and this is a popular one, use Islamic mutual funds and ETFs. Think of those as ready-made baskets of halal stocks, so it's super easy to diversify. And of course, you've always got the classic tangible assets, like real estate or physical gold and silver.
All right, now for the question on everyone's mind. What about crypto? This is a really hot topic, and honestly, Islamic scholars don't all agree on it. On one side, you have the view that if the actual project behind the cryptocurrency is Sharia-compliant and it serves a real, useful purpose, then investing in it is okay. But there's another strong viewpoint. Other scholars argue that the crazy volatility, the intense speculation, which gets very close to that idea of gharar we talked about, and its potential for being used in gambling or other forbidden activities, well, that makes the whole thing haram. It's definitely a complex debate, and it's so important to understand the reasoning on both sides.
Okay, let's shift gears and talk about what is, without a doubt, the single most powerful tool for any UK investor. I'm talking about the individual savings account, or ISA. This is your secret weapon, your shield against that massive £2.6 million tax bill we mentioned earlier. And stay with me here, because the way this works with halal investing, it might actually surprise you.
Here's a little pro tip for you, and this clears up a huge misconception. An ISA itself isn't halal or haram, it's completely neutral. The best way to think about it is like a shopping basket. The basket itself is fine, right? It only becomes a problem depending on what you put inside it. An ISA is exactly the same. It's just a tax-free wrapper. As long as you fill that wrapper with Sharia-compliant investments, your entire portfolio is both halal and it grows completely 100% tax-free. So, which type of ISA should you choose? Well, it really just depends on your goal. If you're saving for the short term, like less than 5 years, a cash ISA can work, but, and this is a big but, only if it's with an Islamic bank that uses a profit-sharing model. For long-term growth, the stocks and shares ISA is the way to go. You just fill it with your halal funds or stocks. And that same principle applies to the lifetime ISA if you're saving for your first home or the junior ISA for your kid's future. Just use the stocks and shares version and you're all set.
And here's why using an ISA has gone from being a good idea to being absolutely essential. The government has been slashing our tax-free allowances. Your capital gains allowance? It's plummeted from over £12,000 just a couple of years ago down to just £3,000 now. And your dividend allowance is a tiny £500. What this means in the real world is that even pretty small investment gains outside of an ISA are now going to get hit with a tax bill. The ISA is really your only proper shield against this.
That brings us perfectly to the other big cornerstone of smart financial planning, retirement. I mean, saving for your future is a huge responsibility, right? The great news is, doing it the halal way is not just possible, it's actually pretty straightforward.
Okay, so most of us get automatically enrolled into a standard workplace pension. And that's great, but here's the problem. You usually have very little say in where that money goes, and it can be almost impossible to know if the default fund is actually halal. The solution? It's called an Islamic SIP. That stands for Self-Invested Personal Pension. A SIP puts you in complete control. You get to choose exactly which halal funds, stocks, or sukuk your retirement savings are invested in.
I love this quote from Islamic finance guru because it just sums it up perfectly. With a SIP, you are the boss. You decide what you invest in. But with great investment power comes great investment responsibility. It's all about empowerment, but also about making smart, informed choices for your own future.
So, we've talked a lot about growing your wealth, which is important, but an equally important pillar of Islamic finance is about purifying that wealth. And that, of course, brings us to zakat. Now, I need you to pay close attention here, because this is an area where a lot of well-meaning investors can get tripped up.
And that leads us to probably one of the most common questions I hear. Okay, I own some shares. How on earth do I calculate my zakat on them? It can feel a bit complicated at first, but thankfully there are clear, established methods from scholars that we can follow.
Basically, there are 3 accepted ways to do it. The first one is the market value approach. This is the simplest, and it's mostly for short-term traders. You just take the total value of your entire portfolio and pay 2.5% on that. Easy. The second method is the zackable assets approach. This is more precise and better for long-term investors. Here you figure out the value of each company's liquid assets and pay 2.5% on your share of that portion. Now, if that sounds a bit too complicated, there's a third option, a widely used shortcut called the 25% proxy. This method just assumes that about a quarter of any company's value is zackable, making the calculation much simpler.
Wow, okay, we have covered a lot of ground, from the core principles all the way to the nitty-gritty of taxes and zakat. So now, let's pull it all together. Let's turn all this knowledge into a simple, actionable plan you can start using today.
So here it is, your halal investment action plan. Think of this as your checklist. Number 1, verify. Make sure every single one of your investments is Sharia-compliant. 2, prioritize your ISA. Your absolute top priority should be to max out that £20,000 annual allowance. 3, plan for the long term. Start looking into an Islamic SIP for your retirement goals. 4, fulfill your duty. Calculate and pay your zakat accurately every single year. 5, keep good records. This is crucial for both your zakat calculations and for HMRC. And finally, number 6, when in doubt, always seek professional advice.
And speaking of professional advice, it's really important for me to mention this. Everything we've talked about today is for general guidance and educational purposes. It's designed to give you the knowledge and empower you, but it's absolutely not a substitute for financial advice that's tailored specifically to you and your personal situation.
So before you make any big financial decisions, please make sure you consult with a qualified professional. If you want to discuss your own specific situation or anything we've covered here in more detail, you can get in touch with the experts at ProTax Accountant. Their details are right there on the screen. You can reach them by WhatsApp, phone, or email. Thanks so much for joining me today.